Video's almost up. Oh, man, got a back problem today. Alrighty, good to go. How are you doing? I have a serious back problem today. Woke up with it. Crazy. So thank you for being here. Thank you for being part of the Forex.Today community. Today we'll do gold, oil, Bitcoin, ADP, yen, Swissy, dollar. Of course, answer your questions. So without further ado, get on with it! Thanks, Pete. Appreciate that. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay.com today. Open up a demo account. Once you're in the back office, and honestly, that process is like 30 seconds. So once you're in the back office, download MT4. Place some trades. You'll be able to see the fast execution speed, you'll be able to see the low spreads, and you'll be able to see the large swaps. So TradersWay.com, maybe, just maybe, if over the next day, week, month, or year or more that I work with you on a daily basis here at Forex.Today, maybe you'll develop skills and confidence, the kind of skills and confidence that you need to build up to trading real money. So if I can help you do that, maybe when you're ready to trade real money, perhaps Traders Way has earned your loyalty and respect, and you choose them to be your broker, and you open up a live account. So really, it's a symbiotic relationship. That's why we're all here. So thank you for being here and being in my life. Please make sure you treat everyone in the chat with dignity and respect. If you got some negativity, check it at the door. If you're here just to heckle, I'll block you and you'll disappear forever. So what's the point? What else? If you need more resources besides these free webinars, look at the description below today's video. You'll have a link to Traders Way, a link to my book, a link to my chart templates, a link to, I think, performance coaching, all that kind of stuff. It's all there in the description below. And if it's not too much of a problem, would you please click like? Would you please subscribe? And would you please leave comments on the videos? These simply tell YouTube that the Forex.today community on the YouTube platform is quality content. Would you please do that? Again, tell YouTube that the Forex.Today community is good by leaving comments, by leaving likes, and by subscribing. Thank you. So today is ADP. That acronym stands for Another Dumb Prediction. So there's no historical correlation between ADP and NFP, but it often creates a good scalp. Let me reset this. I had this full screen earlier for myself. There we go. Oh, is it not there, Jim? I thought it was. Well, Amazon.com. La 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 la. Yeah, well, like we said, Mr. Highvolt, that lower interest rates in the United States will benefit emerging markets. Right? Oh, by the way, the mug of the day, I suppose you can't see with the light on. The mug of the day. 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 It's the economy. Slurp, slurp, slurp. More volume. Volume is nearly max. Volume is on the mixer at yellow. No, it says that's all. I don't know if you'll be able to see that now, but oh, right on, Mr. Highvolt. Appreciate that. All right, so let's just move on with it. Move on with it. WTI. So we did get our cut. Did you guys see that? OPEC did cut. $1 million barrels a day. $1 million barrels a day. So, have you spent some time on the site? OPEC celebrating their 60th anniversary. Ah, come on. There you go. Neato, right? World Oil Outlook, OPEC Energy Review, Annual Statistical Bulletin, press releases, all these things can help you be a better trader. There's so much wonderful data out there, very accessible. OPEC is a nice site. And then you can go to the EIA, which is the opposite of OPEC. Or is it the IEA? I always mix those two up. I guess it's the IEA. These are beautiful fundamental resources for you. Wonderful resources. Okay? Africa. So IEA was set up to be the equal and opposite to OPEC. So as a group, it's the International Strategic Petroleum Reserve. So anyways, lots of wonderful data out there. If you're going to trade any energy, whether it's Brent or WTI or even nat gas, or you want to consider yourself an expert in these energy fields, these websites are something you should read on a regular basis, and they're wonderful. They're just wonderful. Analysis and data and such, just wonderful. Okay. So here we are, we cut yesterday. Now we're stuck up in this range. That's all. So now it's no longer moving down and it's no longer moving up, but maybe it's more likely to move up with a cut. So cut, lower supply. Okay. So you have demand, you have supply, so you have price, and you have quantity, you have oil. Okay, label your charts. Right, quantity goes from this equilibrium, we'll call Q1, which was the amount of oil the world produced yesterday, to price 1, the cost of a barrel yesterday. Okay, OPEC then cuts to supply 2. Okay, so then we get a new equilibrium quantity. So OPEC cuts oil, the quantity of oil falls. So imagine this is 1, 2, 3, 4, 5, 6. So we went from 3 to 2, and the equilibrium price moved from P1 to P2, which is up, if you imagine 10, 20, 30, 40, whatever. Okay? So the price went up as quantity went down, and therefore you would expect this to do this. Okay? Pretty simple. And of course, we knew that coming. We knew that was coming. We talked about it yesterday and Monday. So now it's Wednesday, and it happened. Cool. And it happened in this period here. So anyways, once again, be a bull or be a bear or get out of the way. Beast. Beast is in a sell zone. It's back out from a 1 minute to a 30. Okay. And we're just stuck. Okay. Getting pretty close to being knocked out. I can't quite see what I got on this. 300 pips. So I'm just going to sit here, and if I get knocked out, I put 300 pips in my pocket. So I think I'll just sit tight. It's an all right spot. It's not a great spot, but I mean, it's not a good spot at all. But this is a step down, and the idea typically is you'll get this. Oh, Benjamin wants to go back over oil. What would the target be? Well, it depends on your analysis, right? So we can take a look. How would you look at this if you were a bull? if you were a bull, you'd, let's say, fib it. Is there a 3A2? 3A2, 1618, 52. Okay, let's look at Eurodog. Okay, it's done the full 786. So I'm going to breach this or delete this. And now you need to look at it as range bound. Okay. Carly says, hey, if oil goes up, that means US Noki will go down. Correcto mundo. That is correct, Maurice. Woo, woo. Okay. All things being equal, right? Now, dollar might be strong. Remember, I suggested if the Fed cuts, the dollar should get strong, right? We talked about yesterday being sort of a momentary risk on, and then the world wakes up and says, wait, coronavirus doesn't go away. I better get some bonds before the Fed cuts again. So this comes back around. So you got to be careful. You know, oil may go up, but dollar might go up. So I don't know. Be careful. It's not always so easy, but you certainly could look for your prices. Right here, it doesn't look like a good trade. So, right, it looks like a consolidation. So your real play here, if you're a strong kroner trader, you're going to do it this way, but not a penny higher, not a crown higher. Okay, it's just not a good price, is all I'm saying. So that you probably won't get a trade there. The only trade you could get is trade the inside range and hope it breaks out. But yeah, the coronavirus. Yeah, krona, kroner, krone. It's all the same to me, dude. Gold. Okay. Up, 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 down, down, buy. Up, 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 down, down, buy. And we're kind of hanging out here. It's not a good price. We got this in our face. You know, we had the up, the down, the up, the down. I think there would be an up and a down, but I don't know if you want to get involved during this. Seems pretty risky to me. No, I'm not saying the Danish currency and the Norwegian currency are the same, nor am I saying the cultures are the same, nor am I saying the people are the same or the right? What I'm saying is a krona, a kroner, and a crown, the word is the same. Krona is crown, kroner is crown, crown is crown. Oh, did I have DKK? I'm sorry, guys. I've been up quite a while, actually, and my back is killing me. I usually don't have back problems, but I got a back problem today, so anyways. Sorry, maybe that's why it didn't look quite right. Noki. Okay, Noki. Sorry, maybe that's what you meant in the chat. Okay. I'm talking about the word krone, kroner, or crown. The word. That's Denmark, Joe. Oh, my drug dealer says cocaine would help. My barber says I should get a haircut, and that might help. My mechanic says I should get a tune-up, and that might help. The 2-year and the 10-year, are they guidance for the Fed to determine their Fed funds rate? The spread between the 2s and the 10s? Is it a guidance? No, but it's relevant information because it tells you what prices are being negotiated by smart money. So, but no, that's not really how the Fed works. Okay? All right, Arturo? Not quite. But it's relevant information, but they're not going to like say, oh, look at the 10 and the 2. It's the other way around. The 10 and the 2 are affected by the Fed. Okay, Arturo? All right. So this might be a better representation of what we're talking about. So sorry about that if I confused you. I just was looking at the wrong thing. I'm a little slow today. So we had the full trade. So the weekly swing. Remember, there was an assumption that the Fed was that OPEC was going to cut. So you could have had this as your alpha, but anyways. This is the swing, and this was the target for the week. So as far as you're concerned, your weekly swing is done. You got exactly what you want. Okay? Now, a monthly swing is slightly different. Your target instead is down here. So now you got to fold some price action into this. So we know the first step has been done. You could just cash out and walk away. And then next week, catch a move like this and then be done. Or let the whole thing run all the way by managing your risk. Or add a second one here, right? Or take one, get out, take a second, get out. Cody's got a funnel. Joe says he no longer believes they, and I believe that means Fed, control interest rates anymore. Well, we did talk about that when Jay Powell took over. He is not an economist, and therefore he's following Trump, he's following the market, all that kind of stuff. The last time that happened, it was under President Jimmy Carter. And that person, I don't even know his name. He's lost in history. But he was a horrible, horrible, horrible central banker. And they had to fire him and bring in the late, great Paul Volcker, who was an amazing central banker. Okay. So it wasn't a good sign. And now you see Jay Powell, and he's watching the S&P 500 making, central bank decisions. That's very dangerous and probably ineffective. Trying to get that out of the way a little bit. All right, cool. By the way, thank you for those who clicked like. And for the other 66% who have not clicked like, would you please take 1 second and click the like button. It would be greatly appreciated. Once again, you're simply telling YouTube that this is quality content, and that would help support our community. Cool. So that's that. That's how I'd play that if I were me. Take a look at Bitcoin here. Somebody said, Wayne, why do you do Bitcoin like this? And why don't you have the pivots? And okay. I can trade on any template you want. It's all the same. Jim, they're all psychological moves. Okay? So that's kind of what we're looking at here on Biddy. If you think it's going up, it needs to like giddy up, man. It needs to move if it's gonna, okay? But it's not acting like it now, but it might. So right now you got to trap it here and here and probably think this way. Okay. What do you mean even explain, HK Trader? We went through the Commitment of Traders report 2 days ago. No, they don't, Ed. Cool. Okay, so I'm just kind of identifying support and resistance. It's kind of hard now because it's so sideways, it's not doing anything. We haven't really hit the sell zone. We kind of hit a buy zone, but it's not going up. It's going to be challenging with these types of moving averages and stuff. So right now you could buy I don't know, a tiny dip, but it's pretty risky. Especially on something that can drop 5% in a day, you got to be very careful. Yeah, go back and watch the video from 2 days ago where I went through the Commitment of Traders report and explained that. I believe it was Monday. All right, let's go through, well, let's take a look quickly at the indice. B's pretty weak. Aussie still recovering. Euro fairly strong. Kiwi recovering. Swissy all over the place. CAD weak. So CAD maybe will improve with the new oil cut. Don't you think? Yen fairly strong. Dollar has been fairly strong. All over the place. Huh? I think maybe I'd look at CAD Yen and see if that'll flip around. What the hell is this? Looks like I was doing some MetaTraders testing, huh? Does anybody like any of this? Looks like it's automatically drawing Fibonacci. It's giving multi-time frame analysis. average true range, and then some sort of risk management. Do you like any of this? Yeah, I suppose. That good call. Good call on that, TBM. Thank you for reminding me. Never really played with it, but you can see I've installed it for some reason. Making the way, the only way they know how. Let's just go to good old stuff. All right. Yeah, so CAD cut, huh? So it really comes down to whether that is offset by the OPEC cut. I made them, Coco. You can get them at metatraders.com. Just a little bit more than the law will allow. Yeah. So we'll see how much this gets offset. So production cut, and you would expect this to fall. So we're running into some support here around 9. That's actually 920, isn't it? Yeah, more like 920. You too, MHB. All right, so why don't we do this? Why don't I open up the floor to take requests? Let's do that. Help me help you. What would you like me to cover today? Hey, Hoodoo. Black Hawk Down, huh? Sure. I thought you were from South Somalia. Euro dollar, Nazi, CAD for the rate cut. Why won't that pop out? Interesting. Okay. CAD denominator, numerator, denominator, numerator. So let's switch these around. Put the denominators on the bottom and put the numerators at the top. Okay, so you tell me, should I be a bull or should I be a bear? Cisco says Bank of Canada thinking about cutting more than the US. You know, you got to understand the US cut so that other central banks can cut. Do you understand that? The Fed didn't cut for the US. The Fed cut for other foreign banks. Jonathan, I did that about 5 minutes ago, Johnny. 2 people bear? What? Anything else? Bear on CAD or bull on? A bull on CAD or bear on CAD? What are you? Different time frames on your CAD profile. Oh, okay. Yeah. Making the way. The only way they know how. All right, lots of bears on CAD. So you're saying this one down. Okay, so let's put them all down. Down. You want to do weekly down? Yeah, let's do a little bit. Let's do weekly a little more. The only way they know. Swing trading, bearish weekly bias. Template. Swing trading, bearish weekly bias. Template. Swing trading, bearish weekly bias. Okay? Oh, wait, these need to be bull. Sorry, got these ones backwards. Okay, everyone following me? They're all weekly pivots. If the CAD is going to be weak, and look like the majority of people in the chat said bearish, okay? If CAD's going to be weak, the top 2 will fall, and if the CAD's going to be weak, the bottom 2 will rise. Oh, you don't like the Dukes of Hazzard? She was more like a beauty queen on the movie screen. All right, cool. So let's take a look. This is our price from 71.77, 72. So it looks like our general plan is to sell off 72. Okay. Our plan on this currency pair last week was sell off 72.50. Okay. So last week, delete. Last week we were down here on Friday. So on Friday we said we would let it rise and sell it here, which is Monday. And now we're working next week already, and maybe it's too early for that. I don't know. Let's take a look and see where the target is. So let's get rid of these for now, because it may be too early for next week, especially with NFP coming up. So the target currently is 70. Okay. So our current trade plan for the week was sell at 72.50. And the target is 70. Okay. So let me express myself clearly. This is what you should have done on Thursday or Friday. Okay? You're missing a big part of trading if you show up every day looking for what to do. This was plannable on Thursday and Friday. This is why the swing trading group meets on Thursdays. Because if you show up on Monday saying, oh, I wonder what's going to happen this week, you're already going to lose. No, your math is wrong. It's 250.0 pips. Okay? You're adding up the fractional pip. So I want to be clear because some new people miss this up. When I say I have 1,000 pips locked in, I mean 1,000 pips. I mean 10 cents. Okay? I mean selling at 1.30 and we're at 1.20. My stop's at 1.20. I mean 1,000 pips. Okay? So when they added fractional pricing, this little 0.1, it really screwed things up. Especially with stop management and stuff like that. Okay? No, I'm not counting the fractional pip. So, if I were going to have 1,000 pips locked in and I sold at 71.50, 1,000 pips is getting it all the way down to 61.50. That's 1,000 pips. I'm not counting the 0.1 and the 0.3 and stuff. Okay? The pip bats and stuff, so stupid. It was one of the dumbest things that the currency industry did. But people were so concerned. Do you pay 2 pips or 2.1 pips? It's the dumbest thing to be concerned about. The cost of your spread is the dumbest way to pick a broker. Because an unscrupulous broker that says, hey man, everyone's charging 2 pips, but we'll charge you 1 pip, will slip the heck out of you, and you're probably paying 5 pips because you picked a broker that is scummy and scammy, so that you could save a nickel. What you want to do is pick a broker where when you hit the buy button, you go click, it goes pop in, you're done. And whether it's 2.2 pips or 2.8 pips or 2.1 pips, doesn't matter at all, dude. Just cheap. I've never been a believer in cheap my entire life. Cheap, in my opinion, this is my opinion, don't get all upset at me. This is my opinion. I believe cheap equals crap. If it has value, it will never be cheap. So what you want is value, and you pay for it. So I want a broker that when I click the button, I go buy, and you hear the snap, you're in. And if it costs me 0.4 extra pips to have a broker that executes quickly, then so be it. But I would never pick a broker because they're cheap. It sounds dumb. Cheap is not playing safe, it's playing poorly. What I mean is almost always, so almost always you lose value. Cheap, oops. Now, I don't want to get on this. I don't even know why we're here. Cheap does not equal deal. It means you're cutting corners and all that kind of stuff. You want value. I don't want cheap. I want quality. I don't want to overpay, but I want quality. Everything in my life, I want quality. That's right. Carlos says it, right? You end up paying twice with cheap. Yeah, basically, yeah. It never works out that you get value. You just got crap. Now, if you get crap and you only paid a little bit of money for it, then you lost 100% of a little bit on crap. So whatever. I don't want to get into this. This is philosophical. Some of you guys might completely disagree with me. I don't need to get into that. You can believe what you want to believe. I'm not here to convince you otherwise. But I will teach you how to trade. So that's why I'm here. All right. So the opposite and equal is buying on this side would indicate that you're selling Canadian dollar and exchanging it for Aussie. So the way that, you know, for those noobs, if I'm a buyer and I think this is going up, what I'm doing is I'm buying Aussie and I'm paying for it with Canadian dollars. Okay? So what happens is I exchange my USD for CAD. Now I own CAD. And now I got to sell my CAD in exchange for owning Aussie dollar. Okay? That's what's happening here. Because my money in my account is dollar. So I got to use this as collateral so that the Bank of Canada gives me some Canadian dollars, and they're going to charge me an interest rate for that. So now I own Canadian dollars. I use my US dollars as collateral, so that gets blocked. Now I got my CAD. I borrowed it with this as my collateral, so now I own this, but I don't want to own it. I want to trade that. So in effect, I'm selling my CAD so that I can own the Aussie. So in this case, what happens is this goes down and this goes up. Now, the opposite's happening in the world. The quantity of Canadian dollars, we'll put this Q sub CAD, the quantity of Canadian dollars in the interbanking system, so interbanking system, okay, the quantity goes up because I'm taking my CAD and I'm adding it to the interbanking system and I'm extracting Q sub odd. I'm subtracting the Australian dollar. So I'm flooding the market with Canadian dollars and I'm withdrawing Aussie, so the quantity of odd goes down. So you can explain this in two charts. How am I going to do this? Oh, I know how I'm going to do this. La 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 la. This one. Okay. So you got the first one. Let me do this fast. We'll call this CAD quantity value or price. Let's, I guess I have to do price. I think technically it is price, not value. So I will have to do it properly. Okay. Okay. Price. And then you go another one for Aussie. And by the way, can you imagine doing this on midterms and stuff? You actually have to draw your charts. Price and quantity of the Aus. Okay. So this one, that's the supply. No, sorry, that's the demand. This is the supply. So supply 1, demand 1. The supply of Canadian dollars, well, this is demand. This is the supply, right? 1 and 1. All right. So the supply of CAD increases. So we go to supply 1 to supply 2. And because I'm removing an Australian dollar from the interbank system, the quantity goes from S1 to S2, less supply. So quantity of this has fallen, and the quantity of this has risen. Okay? So let's find the new equilibrium price. So quantity has gone from Q1, right, down to Q2, as seen by a falling price, or a falling quantity. And now price 1 is the old price, and here's the new price, P2. So Aussie dollar, quantity has fallen, price should rise. And then here, you got the first equilibrium, right? This is quantity 1 to quantity 2. So the quantity of Canadian dollars has risen. Meanwhile, the old equilibrium price is P1. The new equilibrium price is P2. And the value of the Canadian dollar has fallen. See? So CAD from P1 to P2, down. Aussie from P1 to P2, Aussie is up. Okay? Okay, so that's what's going on, yo. So we are on this pair weekly bias bullish. And that's what we're looking at here. Okay, cool, right? So one of the things I look at before buying is I don't like buying step downs, and this is out of the day trading course. Now, these are weekly steps, but that bothers me. But I do like the fact that we're up here. So now, intellectually, I can say, okay, we got the higher high. I got permission. It's not the greatest, but it's the beginning, potentially the beginning of an upward move. So now I can switch my template to day trading bullish. And I'll give a couple of zooms in. You don't want really be on a 4 hour on this case, okay? And we have this as a buy zone. And we skipped this one and we're already here, okay? So what happened was price action was more important than pivot points, which I always think is true, okay? What we see is tomorrow this is what's likely to happen. Some version of that. So let's try to find an interesting number somewhere in there. So let me throw down a horizontal line. Let's look at this. 88.25. So what if we just went 0.880000000000? Would that be a psychological level? Yeah, but it's too far down. So we already played that. We already played that. You see the breach? That was a play off of the psych. So we have the higher high, higher low, gone. So we may be above day trading on this one. But nonetheless, let's see if we can catch this falling knife or catch this. How do you catch a hummingbird, I guess? I don't know. Let's take a look. There's multiple ways of doing this. You can use this as a role reversal. Another way you can do this is you could use Fibonacci. Okay. So I got price action, I got Fibonacci, and I got pivot points. So there's a lot of risk to this because we have not made a higher high. So we are going to need a dip and then a cut. Cool, right? Lovely. Anyways, there's theory for the day. I don't know why I'm so tired. Got up too early, I guess. About 9 o'clock. Did you guys leave comments on yesterday's video? Many, many, many people promised they would. Well, if you have not, I would appreciate if you did it. I did a 4-hour webinar yesterday. So it took me 4 hours of my life to do that. I think it will take less to leave a comment now. So if you could do it now, it'd be appreciated. And thank you if you did. I appreciate that. Thank you for supporting the community. Liked is good, HK. It's a start. Leaving a comment is even better. Even if you just say hi, just say hey, just say thanks, man. Awesome. Just saying that is enough. It's not like YouTube is reading your comments. They just look at the stats. Average watch time, average number of likes, average comments. This all shows interaction. It's very, 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 very important. It'd be very greatly appreciated if you took the 8 seconds or whatever it takes. Cool. Thanks, Pete. I don't know. I'm off today, man. I'm off. I'm not sure why. Guess we'll go through the exotics. Okay. Wonderful trades. Wonderful trades. I had Monday's trade plan here. Then we had follow-on trade here. The next one will be here. Quite nice. Felipe, no. I have not changed anything in my trading style in, a good 15 years. Wayne, why don't you put longer trend lines? Like what? Like what, MHB? Like beyond weekly kind of thing, or beyond? Like if you're talking about this kind of stuff on a weekly or daily chart or weekly chart, I mean, there's a couple of ways to answer that. I don't really like I don't like sloped trend lines. So they're very subjective, and we could have 10 different traders and have 10 different trend lines. I prefer horizontal, and they're usually based on things like psychological levels and stuff. Also, anything beyond a 4-hour, I've generally already made a decision, but based on fundamentals, not technicals. So maybe that addresses some of what you mean by longer trend lines. Okay, I'm a fundamental macro trader. So again, anything beyond a 4-hour, I've made my decisions based on fundamental analysis, not on trends or trend lines, okay? So I looked at this on a daily chart, and even though it's been going up, and I know it's going up, I'm not a fool, but I am a bear. Well, some people do, but most people lose money, MHP. So to me, what happened 5 years ago or 2 years ago is not fundamentally the same, so I don't treat them the same. Now, do I ignore key psychological levels and stuff? No. But I've already made a decision. Okay, I've already made a decision on a higher time frame. So I'm either a bull on this or I'm a bear on this, okay? And the rest, 4 hour and 1 hour and 30 minute, it's all about entering trades and managing risk. And the price action will show me those prices that you're talking about, like a 5 year trend line or something. Almost always, probably always, there will be technicals that confirm or deny those price zones. But I'm not going to look at monthly and say, and try to find a line. And of course, now I can't find a line. But so I think I answered the question, right? So if it's important, MHB, I will see that technically. It's not going to blindside me like, oh my God. I will see that. Okay. So like, I guess we could take this as an example. This has been going up for a few weeks now, and I'm a bear. So what I'm most interested in is I see the psychological level of 7.00, as you guys probably saw too. So I'm expecting this to roll over, which it did. And we started selling this yesterday, remember? So I see all of this. And because I'm fundamentally and macro biased, I know not to sell this. 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 Now it's getting interesting up here near the psych level. And I'm waiting for signs like a double top, lower low, lower high, lower low, lower high, lower low. So now I know to sell this. 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 Versus I know not to sell, not to sell, not to sell, not to sell, not to sell. Okay. And this process is going to incorporate everybody. It's all inclusive. If there's a trend line from 5 years ago, 10 years ago, I'm going to see it. Oops, I'm going to see it. Okay, it's all incorporated. So I got my macro fundies and I have my price action. This is all, and it all boils down to price action. You don't need the moving averages. You don't even need the pivot points. You know, none of that is that important. What's important is the price action. And if there's a 5-year trend line here and I'm a bear, oh, I'm going to catch it. I might not actually physically see it, but I will see it through the price action that other people are taking. And I know as a bear to sell the lower high, sell the lower high. And I will continue to do that. And if there's a 5-year support trend here, I'm going to see that when we get down there. Okay? I will see it through the price action. Okay? How do you define the highs and lows? Okay. Well, here at that point that was a low, then it made a high, then it made a higher low, then it made a higher high, then it made 100% retracement, not a higher high, which sets up the high probability of a lower high. Okay, and that's why we call this an a head and shoulders pattern, which is a reversal pattern. Okay. And so this new pattern of lower high predicts a lower low, which it made, because this low is lower than this low, which then predicts a lower high. So it goes up, back up into a roll reversal, but not higher and high than this. So this is a high, but lower than that high. And that lower high predicts a new lower low. So that's why you short there, and we should be down here. Right? And then that lower low should predict a new lower high, which then should predict a lower low. Okay? Until you get something like 100% retracement and you're like, WTF? Where's my lower high? What the heck is this giant 100% retracement? Because another way of doing this, and by the way, when I say 100%, what I mean is I'm actually doing Fibonacci. So, okay, there's a 618, down, great. That's simple Fibonacci. New lower low. So I measure from the lower low from the previous lower high. That predicts another 618. Great. And that predicts a move down here. Great. And I will keep doing this. Okay? So this whole time, the standard operating procedure for trading is you've measured this low, it's going to meet right in the sweet spot, and then it's going to create a new lower low. So if instead it goes from lower high to lower low all the way back, there's your 382, there's your 50%, there's your 618, your 786. So if you make 100%, WTF. Because that doesn't exist in a lower high, lower low, lower high, lower low world. What the heck is right? What the heck is this? You're not supposed to be in here, or God forbid, here. So any kind of move like that is shields up, red alert, right? So like, right? Higher high, higher low, 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 higher, 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 high, higher low, higher high, higher low, higher high, 100% retracement, WTF, shields up, red alert, what the heck? That doesn't belong in an uptrend. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, until you get the WTF. How could it make such a strong upward move? Okay. Okay. Good. I'm glad to see institutions getting involved in doing their job. And Mr. Highvolt says, well, or you can just call it a double top. To me, it's all the same. You can call it what you want. So could you call it a double top? Well, the first thing people are going to call it is a head and shoulders. If it was a crown, it would look like this. Not dramatically different. You might just call it a top. You might just call it resistance. You might call it a 1, 2, 3, 1, 2, 3, or whatever. You can call it what you want as long as you're selling, right? You can do it. Call it whatever you want. Okay? You can have any color you want as long as it's red. Young Wolf, of course, you don't know that. But there are rules of engagement. So, Young Wolf, let's try to use sort of a military analogy. You used to be a civilian. I've shaved your head, thrown you into boot camp, and turned you into a grunt. Okay, great. After that, I train you some more, I train you some more, I train you some more, I train you some more. Now you're an elite trained soldier. How are you going to behave in active combat when bullets start firing? I don't know. But you do know how to kick down a door and clear a room. But you never know what's behind the door. Every time you do it, it's scary. But you're well trained, you're going to do it right, you're going to kick down the door right, you're going to clear the corners right, you're going to, you're not going to shoot civilians because you're super well trained. And if you do pull the trigger, you won't miss. Okay? But we don't know if you're going to live or die. Same thing here. The way to use Fibonacci is you sell in this zone. I call it the sweet spot. Okay? So, as a highly trained soldier, when you got a lower low, you know your job is to sell in the sweet spot, and you will sell in the sweet spot. You'll do it 100% of the time. Okay? Okay? If you're wrong, your stop is either going to be here, here, or here. And this will determine... actually, let me draw this slightly differently. Let's do it this way. This determines how much risk you're getting and which line get you kick off of, which line actually acts as resistance, determines how much reward. So you can see, I'm going to call this one a 618. The 618 predicts a 1382. So you are now risking, let's say you took the full Monty here. You're risking the 618 all the way back above the 100. So you are risking 38.2%. Okay? Which means if I'm going to go this other way, if I get to this line, you're going to gain 61.8, but we're going to the 1382, so you're also going to gain 382. Okay? So you're risking 1 to gain 3. Okay? To put this differently, if you were wrong 66% of the time, you only sold lower lows that created lower highs. And 66% of the time, for some reason, you were wrong. 66% of the time, it did this. How much money would you lose? Hello? Type in a question mark if you don't know. I'm not good with math. I'm not good with math. $0. Now, if you lost 66% of the times, you're bananas. B-A-N-A-N-A-S. That's bananas. To trade a situation like that and lose 66% of the time, you clearly don't know what you're doing in that scenario. You know what I mean? Like, there's just no way that's going to happen. I don't think it's actually mathematically possible for you to trade a scenario like this and be wrong 66% of the time. I don't think it even happens. If that's all you did, you would do well. You would make money. Pretty decent money, in fact. Okay? And of course, what saves you is your winners are worth more than your losers. So, if you failed 50% of the time, and that can happen as a newer trader, you could fail 50% of the time. Okay? You would be profitable. Okay? You would be profitable. If you failed 50% of the time, you'd be profitable. It's the power of letting your winners run. And that's not a good winning ratio. Once again, your analysis must be pretty far off. Usually, if you fail this much, you're okay at technical analysis. You just don't have a plan. You just really don't have a plan. And therefore, half the time you get it right and half the time you get it wrong because the market is a bitch. That's how it is. And so you're like, what worked yesterday doesn't work today. And you're like, oh, well, it worked yesterday, and whatever. You suck at planning. But at least you're half decent at technical analysis. Okay? Now, if you have a trade plan a day or two in advance and you know what you're looking for before it's happened, and then you witness it happening, and then you participate in the birth of the new trend or the continuation of said trend, you're gonna be more successful than 50% winners, 50% losers. Now, would you get all the way to the 66 wins? No, I don't know. Yeah, maybe, but it comes and goes, depending on market conditions. So that my point isn't like, if you do it right, you should be at 66, because then newer traders get locked in that, like, oh my God, I have to have 66. No. The first thing is, even if you suck, you wouldn't lose money if you had a good trade plan and a good setup. And then if you get better as you get more experienced, you will not suck anymore. You'll just be mediocre, but you'll be profitable. And then if you actually get better at planning your trades in advance and analyzing market conditions before you start throwing down trades, you will improve from mediocre to better than mediocre, but you'll have enough pips to stuff in your pockets to be happy and survive your first year and survive your second year and survive your third year. And your account gets bigger and bigger and your lot size gets bigger and bigger. And 5 years from now, you're making 3 times more money than you used to make. And you enjoy what you do. That's what I'm trying to get you to. Okay? I'm not trying to make you a millionaire. I'm not trying to get you a yellow Lamborghini. So what is my number one goal? You guys remember this from a book? I believe it's in the book. What's the credo? Number one. I'm using military analogy here. Imagine you're in active combat. You're in a war. You're a foot soldier. You're a grunt. You're in a foxhole and you have a rifle. What's your number one goal for the day? Live. Don't do something stupid and get yourself killed. That's your number one goal. I don't care where you are in the battlefield. You're praying to God you don't get killed today. Don't do something stupid and get yourself killed. Number one goal. Same thing with Forex. That's what it is. Number one thing, do not lose money. Don't do something stupid and blow up your trading account. Number two is achieve the mission. That's your trade plans. Number three, win the war. That means you get to go home, be with your family and your loved ones, and not live through the horrors of war. Well, another way of looking at that is retiring. Or another way of looking at that is making more money trading Forex than you need, and you like what you do, and this is what you do the rest of your life. You are a professional foreign exchange trader. This is what you do for a living, and you find it fabulous. Okay? So right now, I'm just trying to get you to survive, and I'm trying to show you, if you put your energies into learning how to trade properly, you'll probably live as a trader. I mean, imagine you getting better and better and better over the next 3 years. If I can get you to live for the next 3 years, develop real skills and confidence around those skills, and in the meantime, grow your trading account, then I've done my job. If you want a yellow Lamborghini, by all means. I might chuckle, but I'll still slap you on the back and say, awesome. Okay? And yes, that is from my book. and there are reviews on Amazon that say it's the worst book ever written. Not about Forex, but out of all books in history, my book is the worst book ever written. I'm like, oh, wow. Good thing I didn't go to Harvard to become a writer and then get that kind of feedback. So I suck as a writer, but I'm a half decent trader. Yeah, that's a better way, Prince. Oh yeah, my first Ferrari would be red, almost undoubtedly, but most likely I wouldn't buy a new one, so you kind of just get the deal, right? I wouldn't get a cheap one, but I'd try to get a good deal. But red, I'd prefer red. But I have so many other things in life. Like, I could have skipped Harvard and just bought a Ferrari. Land in Iowa would be interesting, for sure. Yes, I am HK. All right, so anyways, here's the peso trade. It's developed over the course of the week, so I'm sure you got in it somewhere. What day of the month do we sell USD Mexican peso? The first day. Oh, look at that. What day of the month do I buy USD Mexican peso? Never. Never. Never, ever, ever. I never, ever buy USD Mexican peso. But on the first day of the month, I do look to sell USD Mexican peso. Okay? So especially the Fridays. Okay, so you'll have to watch the video on YouTube, how to trade the Mexican peso and why it works. And it'll explain. I won't just set up the trade. I'll explain why it happens. Okay? So anyway, so we get the lower low. You get the triple top. And then you get the roll reversal. Pretty cool. Okay? So now we got to pay attention to this. Okay? No one wanted to challenge 19. We were willing to sell it off 20, but no one wants to challenge 19 without a fight. So you got to be careful in there, huh? It's called How to Trade the Mexican Peso and Why It Works on YouTube. YouTube! But I believe it's on the Trader's Way. Anyway, so let's go to YouTube. YouTube, as they say. YouTube. We'll see. Ah, stupid. Windows sucko. Wow, a little slow. Hello. Okay. Why, sorry. Oh. Could this be any slower? Hello. Because it's time to what? How to trade the peso MXN and why it works. Wayne McDonald. Let's try that. Da-da! Da-da-da! Da-da-da! Da-da! Da-da-da! Da-da-da! Da-da!
Where is the best place to get leads online for your business? Is it YouTube, Facebook, Twitter, or Instagram? Well, if you are a small business owner who needs more leads and prospects,
wow, is it slow today? Holy schnicker schnocker. Schnicker schnocker. Schnicker schnocker, it's slow. All right.
So I looked at back data, and not always, but quite often, at the same time, over and over and over again, the peso tended to get strong for a while. And I wondered what it was. And it was always sort of like the last couple of days of the month or the first couple of days of the month.
Whoa, what? You mean like this? Javier says, Maybach, yeah, anything beyond the S-Class is nice. I mean, S-Class is nice. There's a company, I think in Los Angeles, that makes fake Maybachs. So they take an S-Class, stretch it, and pop in the basically, I don't know what to call them, captain's chairs in the back seat. So you get the Maybach back seat on an S63 or something, and you end up saving like, I don't know, $150,000 or something. It's pretty much same car. They put the Maybach badging on it and everything. It's really funny. So they're Mercedes S-Classes, right? Oh, I don't know, Prince Philip. Look at this. We're just crushing it from yesterday. Good job yesterday, guys. That was pretty epic. Which economic releases do central banks formulate monetary policy around, and which elements of the respective release should we be concerned with? Depending on the central bank, but if you're talking about the Fed's worried about employment and they're worried about inflation. So look at the employment subcomponent of ISM, which I described in detail yesterday. We actually went through an ISM services report. I actually pulled it up and went through it. The employment subcomponent of ISM services is one, okay? Or on the inflation side, they would look at things like personal consumption expenditures, PCE. Yeah, I like Porsches. Yeah, Porsches are great. I don't think I have easy access to photos of my car. I wonder, I'll check. Maybe I do. I don't think so. I don't think I have easy access. How do I do this? Come on now. Google just hijacks everything now. It's amazing. Let's see if I got anything from on Google Photos. Maybe I'll impress you. So all this explains is, how does Wayne McDonald treat money? So you have to remember, I love money. I love it. Right? I love it. So I spend money on things like, oh, again. So I spend money on things like, there's me graduating at Harvard. All right, cool. Anyways, that's not what I want to show though. My wheels, my whip. And it'll explain a lot. Either I'm cheap or is this even good? Oh, there's my wife's car. Or I do something else with my money. Where is it? Come on, I'm almost there. It'll come up. You'll like this. It'll be fun. Probably need to blur the license plate out or something. Oh, I probably... All right, maybe I'll never get there. More Harvard, Harvard, Harvard. Yeah, that school cost me a lot of money. I think I'm down to like $5,000 more, and I'm out. Gee whiz, so many photos. We really document our life, huh? Apparently I smoke a lot of cigars too. Really? There's no pictures of my whip, huh? No. Funny. Check this out. This is kind of funny. Maybe this will show you how much time has gone by. This is me at my book signing party. I was set up, I was signing people's books. 3,000 people showed up to my launch party. And I bought beer and wine for 3,000 people. Your drink ticket, you would tear it off and hand it to the bartender. The other half of the ticket was a bookmark with that said, you know, FX Bootcamp on it, and had all the camouflage and stuff. It was really cool, right? And then you got your drink, but when you ordered a beer, you got it in a camouflage FX Bootcamp branded cup. So people are drinking camouflage beers and wine, and I'm signing the book, and I'm giving out t-shirts, and right? It was great. It was great. Signing books. I'm like, hey man, this might be the only book I ever write. Got to throw a launch party and do it right. What was it, like $100,000 or something? It was pretty cool. So anyways, fun times. I can't find my, you'd love it though. So I drive a golf cart. I was just going to show you. It's a nice golf cart, of course. But that's so I don't waste my money on a car. Can you imagine putting money into an expensive car and then the stock market goes up 30% and the value of the car drops by 30%? Do you know how expensive that is? No, I got rid of that. I got rid of that. It was silly. I don't drive anywhere. I don't go anywhere. Yeah, I got a lot of contacts. So actually, I met a guy in my negotiations class. We negotiated. What were we negotiating? Oh, heart transplants. So he and I and three other people, we sat on a board, and our job was to go through applications and choose 3 out of 7 people to receive heart transplants because they all had a similar heart disease. And so after it's all done, he's like, "Hey man, so where do you live?" And I'm like, "Hey, I'm in Atlanta." And he's like, "No way, I'm in Atlanta." And he says he's on the north side, I'm on the south side. That's cool. So whatever. So that's cool, right? So I Google him. He has a bachelor's degree from Georgia Tech. By the way, Georgia Tech is probably the 2nd or 3rd best engineering school in the entire world. You don't just walk in and like, "Hey man, I want to go to Georgia Tech." The local high school here, a couple of miles from my house, the valedictorian, the guy that graduated #1 in his class, applied to Georgia Tech and they didn't take him. He wasn't good enough. So anyways, Georgia Tech's a big deal now, right? So anyways, so he's got a bachelor's degree from Georgia Tech, a master's degree from Georgia Tech, a PhD from Georgia Tech, right? And I used to sit on a board there. I've actually taught at the executive MBA program. I was a guest lecturer on foreign exchange market and financial market trading. So I went in and I think I did an 1.5-hour presentation there. So anyways, I pinged him. I'm like, "Hey man, we both have this Georgia Tech affiliation. We should get together for a drink or cigar sometime." But that's the kind of person you meet at Harvard. And now he manages a $6 billion budget at a, we'll say national, but almost kind of international company here in Atlanta. It's a global company. You've eaten in their restaurants that they own and all that kind of stuff. So anyways, so he oversees 100 people that manage $6 billion. And that's the kind of person you meet at Harvard. And you're like, "Oh, you're in Atlanta too. Cool." So yeah, that's a good reason to go. But I think you could spend that kind of money differently. If you just wanted to meet people, there's probably a cheaper way of doing it. But I've had some really good times and met some really cool people at Harvard for sure. All right, so let's take a look at this. If you are a bear, this is what you're thinking. Actually, you're thinking this. Okay? And if you're a bull, you are thinking this. Okay? The reason I bring this up is this area here matters. Okay? If it goes north here, it's bullish. If it drops and then goes north, it's bearish. You just haven't seen it yet. Okay, so this matters. So, should you ignore what's happening right now, or is it interesting? Right? Of course it's interesting. So, his parents probably built something on campus. I don't know if Georgia Tech is like that. I don't think so. I mean, they have donors and stuff, but... And of course, the guy's my age, right? Or maybe not quite my age, but, you know, it's not a kid. I'm not in a kid program. So, anyways. So, yeah, you do meet interesting people there for sure. So, like, I'm calling up a Harvard buddy when I'm in New York, and he's like, "Oh, I just bought an apartment on Park Avenue. You should swing on by and check it out." I'm like, "Sounds good, bro. Congratulations." Everyone remembers their first Park Avenue apartment, right? See, look at this wonderful overlap. Excuse me. And young Wolf, I would change it. A wise man once told me, right? A wise man once told me, go to Harvard for an education and make contacts. But Harvard's interesting when you look at Harvard College. Okay, this is the school for like 18-year-olds, right? So they're young kids, but they're smart, driven, and most of them quite experienced at doing something. Kids, right? Harvard College, from day one, they create relationships. Absolutely, 1,000%. They do that. They build that. You eat with the same class for years and years. You live in the old yard your first year. You don't even mix with the other students. You eat at Annenberg Hall. No other student is allowed in that hall. But for a freshman, because everyone's a cohort, everyone's together. There's no like, oh, this roommate does that class and this roommate does that. No. This is a cohort. You go to Harvard College, that's it. What do they teach you when you're there? How to be a global leader. That's it. And you eat breakfast, lunch, and dinner with the same people every single day your first year in Annenberg Hall. And if you don't know Annenberg Hall, think of Hogwarts, that big room. That is Annenberg Hall. They ripped it off to make the Harry Potter movies. That is what it looks like. So imagine living in Hogwarts and eating and dining in that hall. Then, after the year is over, there's a sorting ceremony. So again, in Harry Potter, you know the scene where they bring out the hat and they're like, you're a bad kid, you're going to be in Slytherin, and you're a good kid, you're a Hufflepuff, right? Harvard does that. They ripped that off from Harvard. So what happens is you get sorted into houses for your second, third, and fourth year. And you might live in Kirkwood. You might live in Winthrop is a nice one. You might live in Elliott. You might live in, there's all these houses, right? And they sort you into houses. And now you live with that community for 3 more years in these houses, right? So when you come out of this, it's different from any other university out there. They create global leaders, people that will change the world. And so do you go there for the education? Well, you get a liberal arts education. But do you go there for the context? Holy crap, yeah. And it matters. Okay? It matters. It matters big time. Yeah, incredible. Do whatever you can to get your kids into Harvard. You won't regret it. Okay. No. Okay. I don't know what to do now. Guess we can look at dollar, see what's up on buck. Well, I watch a lot of movies, actually. We must watch 3 or 4 movies a week. All right. So Aussie, dollar. So dollar week. dollar moderately strong, dollar weak, dollar weak. So Aussie is strong, euro is strong, pound and dollar are about the same, slight advantage to dollar, and then Swissy is stronger than dollar. So why don't we do, there could be like, euro pound is probably interesting. Aussie pound's probably interesting. Let's just move over to Swissies in general. Parasite, okay. It won lots of awards, so. Yeah, we're waiting. First of all, we have ADP came out today, and then we got the next thing at 10, and then we got really, we're freezing up for NFP, right? So it's just, it's sort of, it's not abnormal is all I'm trying to say. Now look at this, that kind of price action. So one of the things we talked about is you should be, when you see this, you should be very cautious. So what, this doesn't mean up, nor does it mean down. It means on this time frame here, the trend is dead. Another way of saying it is, you would have sold here with no problem. You would have sold here with no problem. You would have sold here with no problem. You might have sold here with no problem. Now you got a problem. Okay? This is problematic. Okay? Yeah, is the BOC, is that 10 or 10:30? Or is it 11? What time, how about this? What time is the Bank of Canada announcement? By the way, if you just logged in, would you please click like and consider subscribing if you're new? Look at this flip zone, huh? Wowzer. Yeah, cool. Thank you, y'all. All you all. CAD stronger than Kiwi. CAD stronger than Aussie. And CAD yen not doing anything. Amazing, huh? $786, not cool if you were looking for weakness, but we'll see. I must say, though, the one upside to this is if you buy a 786, your stop is only 21.4 away. So it's an aggressive, high-risk trade, but you're risking very little, if that makes any sense. Yeah. Well, I've done plenty of stupid things over girls, that's for sure. But One of the things I used to do is I used to get student loans, and they would send me a check for like $5,000 or whatever it was. I can't remember. And I would double my money with the student loan, then go pay for school, and then travel the world. So I traveled a fair bit amount. I've been an American Express owner, whatever they call it, since like '94. Because back then you got, I think, 2 free tickets on like American Airlines. So as a college student, I'm like, boom. But you had to have cash, right? So anyway, so I get my student loans. I would double my money, pay the school, and then I had my $5,000 left over, and I would travel with that money, and then travel and party and do all the things that young men do. But one of the things I bought was Apple stock. And I would do this every semester. I'd get another check, double my money. Next semester, get a check, double my money. It was great. It was great. Yeah, I get what you're saying with no cut. They kind of, I think, are forced to. So think of it this way. I believe the central bankers have all spoken to each other. Okay? They've all spoken to each other. And the reason the Fed went first is to allow the other central banks to do the cuts they need. What impressed you the most? Well, I didn't travel for fun. I volunteered for a nonprofit organization, so I traveled to support them. I did lots and lots of training. I met with corporate leaders and stuff like that. I'd get tours of factories and met with lots and lots and lots of business executives and CEOs and stuff like that, all from all around the world, or all around the United States, mostly in the Western United States. So I'd go to Seattle, do conferences, do training, do speeches, and then meet with local leaders. And then I'd be in Arizona, and I'd meet with local business leaders, do training, do all kinds of stuff, and then Colorado, and then I'd be in Southern California, then I'd get back up in Northern California, right? And just travel. Then I'd be in New York City. So that's where, once I got to the board, once I was on the board of directors, that's where, we had like George Soros and vice president from Arthur Andersen, a vice president of General Electric, someone from the United Nations. They all sat on the board with me back then. And so I paid for the whole thing on my out of my own pocket because it was a nonprofit organization. But then once I got to the board level, they gave me, they paid for my flight, and I think I got a daily stipend for my food. So I did it all for the money. All right, cool. We got some movement. Volatility's kicking in. Beep, 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 beep. See, that's 786. See, high risk but low risk money-wise. Yeah, so I was on that board for 1 year. There were only 1-year terms. But I remember, I'll never forget my first meeting, February 1995. I bought my first suit, double-breasted, never do that again, double-breasted gray suit from J.C. Penney, and a trench coat and a briefcase, so I felt like a real man. and go to New York City in February. And I'll never forget the first time I rode a subway train. And then I'll never forget coming out, stepping up the steps of the subway train on 50th, right? 50th and Broad or whatever it is. And walking to the AMA building, the American Media Association is where we had our offices for the nonprofit. And going into a real skyscraper in Midtown Manhattan and all these things, all these first-time experiences was such a big thing. You know, your first time in New York City, a real city, you know, it was pretty amazing. And then finally, I talked to the other people on the board. I'm like, so where's the board meeting? You know, when are we going? And they're like, well, we're going to leave, you know, 9 o'clock. We'll take the subway downtown. And, you know, so make sure you're at the office such and such a time. I'm like, oh, it's not in the office. Where's it going to be? Oh, Sherman and Sterling building, offices. I'm like, that's the law firm. Okay, cool, whatever. Where's that? And like, it's on Wall Street. I'll never forget. I'm like, what? Yeah, Wall and Broad or whatever it was. I'm like, what? Yeah, on Wall Street. The Wall Street? Like the Wall Street. Like Wall Street. The famous Wall Street, right? They're like, yeah. I mean, they're New Yorkers, right? They're like, yeah. And I just melted inside, right? Like, in my suit with a briefcase, and I'm going to a board meeting on Wall Street, right? Like, that's a lot to process for, you know, what was I, 21 and a half years old? That's a good day. And they're like, oh, and all these big shots and stuff. And remember the chairman, he was the guy from Arthur Andersen, the big accounting company. And this guy had $1 million hair. $1 million hair. You just look at him like, gee whiz, this guy's successful. I've never been able to get that hair. He's just like, he had $1,000 hair, man. He's just like, what is this guy? So I was just like, I don't know, trying my best not to be a punk, but I was a punk. But I earned my way there. Faux show. All right, so we're caught on the top. This is a normal standard high volatility event-driven strategy. So once you got your line in the sand, mark it all out. I don't know if you really actually want to be on Aussie CAD, but whatever. Yeah, well, you know, that's the best I could do. I remember, like, when I used to meet, like, Fortune 500 VPs and CEOs and stuff, you know, I'm a kid working for a nonprofit. I had, like, a really cheap blazer, khaki pants, and then I remember I thought they were really cool because they were really shiny. I had these shiny shoes that you never had to actually shine. And of course, I'm a college student, so I never shine my shoes. But of course, they're tuxedo shoes. Like, but I didn't even know that. So I'm wearing tuxedo shoes with khaki pants and this weird sort of greenish, bluish blazer. But that was the best I could do. It didn't stop me. I kicked ass. And I negotiated many, 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 many deals with Fortune 500 CEOs. So I got used to that very quickly, and that's how I made it to the board so quickly. I remember doing a speech on work ethic. Can you imagine that? Back in 1994, I was doing a speech on work ethic, and I'm teaching college kids how to be world leaders. And I was talking about work ethic and stuff. And in this case, it was about approaching local companies, right, and get them to work with a nonprofit. So we talked about for 45 minutes. I got my nice suit jacket on, or the nicest one I had, right, and whatever. I was dressed as professionally as I possibly could, like I was going to a business meeting. I was wearing red shoes, which is interesting, right? So I did that as an anchor, So hopefully people remembered this. But anyway, so I remember about halfway through, I'm about half an hour to 45 minutes into this presentation on work ethic and doing whatever it takes, $100 a day, whatever. And then I took my blazer off because I've been talking for a long time. I take it off and my shirt and my sleeves and everything are covered in name tags from companies that I had visited. And so most of them had dates on them, right? So it said I was allowed in, Atari. I visited Atari. And it said the date, it had my name and the date. And then the below that would be, there's so many, most of these companies are not around anymore, but just imagine covered in these name tags from companies. And I'd say, look, this one, and this one are all in the same day. And this one, and this one, and this one are on the same day. And this, the same week. And this, and this. And I was just covered in name tags. And I'm like, I'm taking 5 classes and I'm traveling all around the United States teaching people, right? Teaching our group and our community how to be a success. And on top of that, I'm doing this many frickin' calls. So don't tell me you can't do it, right? So it's interesting that we still talk about a lot of these things, just simple things like a ridiculous, sickening work ethic is a requirement for success. Yeah, I like Tom Ford's stuff. I have some of his Ode Wood scent, stuff like that. I like his style. All right, cool. Yeah, Max. Yeah. We know that, Max. So the question is, can you catch it? Remember, you can't do anything if you can't catch it. Don't worry about it. Okay? My football coach used to say, if you can touch it, you can catch it. Well, right now, I haven't even touched the ball. If it doesn't come back for me, I don't give a damn. Okay? If that doesn't pull back now, then it'll pull back later and you'll get your shot. Or maybe we're on the wrong currency. We just randomly picked that one, right? Is there one you feel more comfortable on? Is there a CAD yen that's better? Okay. Mark your lines, guys. Mark your lines. Okay, drop into a smaller. So you have to decide, are you going to sell into that support or not? What you going to do? What you going to do? So I don't like news trading. It's never actually ever been my thing. So I always preferred like intraday trading, day trading, swing trading, position trading. It's non-volatile and you have tons of time to plan things. So you don't have to be at the right place at exactly the right time. And then very often this stuff, this volatility type trade, you end up getting higher spreads and you can get unlucky and it can flip and then flip again. You get whipsawed to death and you're like, damn it. Where you just don't get any of that with proper trade planning. Right? So just trading the volatility, I've never really enjoyed it. I did Meta. I just never got into it today, I guess. I liked it. I'll do it again for sure. So like, what do we know? What do we know? This is a sell zone. This was a sell zone. Like, you knew this yesterday, guys, right? That's my preference in trading. This went down yesterday, and you knew this was going to sell. And by the way, day traders, you notice? Anyone that's completed the day trading course, you're like, OMG. That's exactly what I'm talking about. Right? So that's what I'd rather be doing. The high volatility event driven strategies, aka scalping the news, it's just never been something I ever really fell in love with. I've done lots of it. I just never really enjoyed it, to be honest with you. Well, Canada cut. Interest rates are down. Less reason to hold the Canadian dollar. By the way, did they cut by 25 or did they cut by 50 basis points? $50. See why the Fed went first? It's why the Fed did an emergency meeting. Okay? The Fed has only cut at emergency meetings, like, I think it's 9 times. So it's really strange for them to cut. The last time they cut before a meeting was when Lehman Brothers collapsed. Are we at a situation where banks are failing, credit markets are frozen, and other markets are crashing? No. And by the way, don't get all upset about a 10% or 12% decline. That's not a crash. That needed to happen. Just think of it this way. Do you remember, let's move this to something else. Do you remember when the virus stuff came out? We were talking about it. And it was spreading across China. They shut the entire Chinese economy down and the stock market in the United States continued to go up. Just consider that up. Stupid, stupid, stupid money. Doing stupid things. So if it went up another 4 or 5%, then withdraw that from the when it came down. So if you say it came down 12%, I say it came down 6%. Because half that money was stupid to begin with. Good job, TBM. So pound and everything else holding firm just fine. Hey, Baby G, somebody had to buy. Somebody was buying despite the obvious risk. That's stupid. By the way, you buy when the market is down, and in particular at low ends of the cycle. So people that get filthy stinking rich, they were throwing money into the market at 8,000, not at 30,000. That is dumb money. That's people at your bank that call themselves wealth managers, all that kind of stuff. People with sports marketing degrees that are wealth managers and working at a bank. That kind of stuff. It's all dumb money. It's that 28-year-old at the mutual fund company buying more stock because the only thing they can do is buy stock, and they keep getting the $50 contributions every month, month after month, so they have to keep buying, but they're not getting value. They're just buying because that's what they're supposed to do. Right? At some point, you need to throttle back. John says there was stupid money from overseas fleeing the bond market and all that kind of stuff. Yeah, sure. But it's still not the right thing to be doing. Okay? Now, people that bought bonds made money. Interest rates went down, which means the Fed bought billions and billions and billions and billions and billions and billions and billions of dollars worth of bonds. So anybody that was front running them made money. And why'd they make money? Because the stock market was going to fall. So people should be moving things around, right? Well, first of all, you can move to cash. You can move to a 3-year treasury, or a 3-month treasury, or a 1-year treasury. Go to cash, lock it in, earn some sort of income, even if it was zero, right? And wait for the, like, for example, real estate. So I'm starting to talk to some very, 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 very wealthy people. And I'm trying to get some, interest built so that we can buy very large real estate projects when the market crashes. I don't know if crash is the right word, but in my analysis of the larger cycle, I believe, I actually said this last year, right? Between this year and next year, it would normally decline. The stock market, or sorry, the real estate market. And think of all the projects that come online late. So there's a guy right across the lake from me. He's been building a 15,000 square foot house. It's taken him 2 years and it's still not done. And by the time it's done, which I'm going to think they're going to be ready by June, by the time they do an open house, the real estate market might be down. Let's just say the U.S. economy hits a recession because of the virus. Companies start laying people off, consumer spending slows down, business activity slows down, and trillions of dollars comes out of the market, and suddenly no one wants to buy his 15,000 square foot house. It's got, I think, 2 elevators, right? So anyways, no one will want to buy it. I'm like, great. But 2 years ago when he brought the first bulldozer onto the property, the real estate market was red hot. That's the problem with real estate. It takes 2 years, but what if you were building, let's say, an apartment complex with 200 apartments? That takes 3 to 5 years. It's multi-staged, right? In the course of 3 to 5 years, the market can go from red hot to ice cold. And the idea is they enter the market and it's only 50% vacancy, and they don't have enough to even cover their loans, and plus the market's down, so the value, and they're underwater. And so what you do is you just go in and you sit down with the owner who's now bankrupt. You sit down with the bank who's freaking out that they got this huge thing, they're not going to get paid. And we say, well, let's take a haircut, or he's out, you take a haircut, I come in and save the day. And now someone else built me 200 doors, and I come in and buy it, say 70 cents on the dollar. That's how you make money. 8 years later, you sell it for twice as much as you paid for it. Meanwhile, you've collected rent and earned a NOI of, 9%. Maybe 10 to 12 if you got the right price. So that's how you do it. Forex student says, so what you're telling me is someone was telling you a 25% decline? Well, you're a currency trader, so you say, that sounds like you're guessing. Why not 26%? Why not 24%? You should tell them. It sounds like you're guessing. You say, well, I've done some hardcore analysis, and I see a 38.2% decline. Okay. Cool. Max, we got a problem? So here we are right on that line. I told you, I pointed this out. So is this something you should pay attention to? Was that right, Princey? Roger says dead people don't buy houses. Well, here's my opinion so far, and of course, it can change over time. But the way I look at this is it's a flu. Yeah, well, I am doing it. That's what I'm telling you, Max. I've talked to 2 billionaires in the last 48 hours. But if you don't want to know about these things, that's cool. All right. Here's my thought. It's a flu. People die of the flu all the time. The flu is very contagious. Last year, my local elementary school went on a field trip to Alabama to see a football game. Yes, I live in the South. What do you mean this hindsight? Dude, spell out what you want to say, dude. Anyways, they go to a football game in Alabama. They catch the flu, bring it back to the school, and like 2/3 of the school got sick. Okay? 2/3 of the school got sick. Nobody died. But it's a flu. Very, very, very contagious. Now, when you look at the numbers of like who's actually dying of the coronavirus, it seems to be most people ages 70 and above. All right, well, I bet you if you look at the flu, a lot of people that die of the flu are probably very, very old or very, very young. But anyways, so it's more dangerous than the flu, that's for sure. But I think the closer we get to summer, the more quickly the virus is just going to stop because flu season will be over, right? So I don't think it's going to spread like a zombie apocalypse. Okay? I don't think it's going to spread like a zombie apocalypse. I think it will spread around the world and then it'll just stop. And then if you're on the other side of the planet and it's summer right now, you better start stocking up on supplies. Yeah, Stephen, I think even our local grocery store will give you the flu shot. Okay? Yeah, Mr. Highvolt. Yeah, so it seems to be, I mean, it's scary that 2% die, but here's how my son explained it to me yesterday, because he's a genius, of course. He says, take a 50-sided die. 50 sides. I don't know the word for that. It's a die with 50 sides. And it says 1, 2, each side is numbered 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay. Cool. You got this 50-sided die. Most people don't get the flu. They don't get the virus. Even if they're exposed, most people don't get it. But then if you actually get it, you take this die with 50 sides and you roll it. And if it lands on the number 1, you die. Okay? Right. So 1 out of 50 is 2%, right? He's like, I don't know, like, so you have to put that into context to see how fearful you are. Is it going to end the world? Well, I think in about the next 90 days, there won't be, the flu season will be over. Imagine you got cancer and you're in the doctor's office and you're like, oh my God, doctor, this is terrible. And he's like, well, we have a procedure. We have a procedure for this because people get this cancer all the time. They're like, oh, really? They're like, what's your success rate with this procedure? 98% chance of success. Well, forget it. I can't take that risk. Forget it. I'll keep the cancer. Or would you be like, oh, thank God? Right? So I don't mean to downplay it, but I am trying to be realistic. Right. Well, Mr. Highvolt, too, the other thought is, how many people simply don't report they have it? Like they get sick, they stay home, and a week later they're fine, and they just go back on. Right? Like you don't go to the hospital if you get the flu, unless you live in America and you go to the hospital for everything. My Billy needs some antibiotics. Help my Billy. He has a runny nose. Give him antibiotics. Like, oh my God. I'm Canadian. You don't go to the hospital unless you got a shotgun wound. Then you walk in and you start apologizing. I'm sorry. I'm bleeding everywhere. I apologize. Sorry. I know I don't mean to inconvenience you. I know you're busy taking care of real sick people. Yes, I got this shotgun to the stomach. I'm sorry. Like, don't worry about it. I'll wait over here. I'll wait. You take care of her first. Right? That's what a Canadian does. They're patching them up and he's still apologizing. I'm so sorry for interrupting your day. I don't mean to be here. I'm really apologize. Right? American, you're like, Billy has a runny nose. Get him to the emergency room. Right? But imagine though, I think most people like feel sick, like, oh, I don't feel really good today. I'll just stay home. And 2 or 3 days later, after eating some soup, they're fine. Okay. I put Max in a timeout. Sometimes it seems to me very childish to put someone in a timeout, but whatever. Okay, so let's go through open trades and see how to manage the risk. Right now I have 2,600 pips. This one is the most vulnerable one. You guys want to look at Aussie yen? It's only got 75 pips. So let's go to Aussie yen. Yeah, I get that, Mr. Highvolt, but again, if it was a disease, my understanding is it's not a disease. It's a virus. If it was a disease like cancer is spreading through you inhaling air exhaled by the guy sitting next to you in an airplane. So you got it on an airplane, you were healthy, you got off the airplane and you have cancer. Like, holy shit. That would be bad. But I think it's just people getting sick, right? Like, I don't feel so good, I have a fever. And you have a runny nose for a few days and you eat a bowl of soup. And after 2 or 3 days of bed rest, you're better and you go back on with your life, right? Am I understanding that correctly? Am I understanding that correctly? Like, it's a virus, like a flu. It's like catching a cold. Yeah, but pneumonia, of course. Yeah, so if you're worried, get treatment and you should be fine. If you're 70 or 80, you got a real worry because you're 70 or 80. No, and I don't think everyone gets a mild pneumonia. Okay? But if you have pneumonia, you need medical treatment. Faux show. Okay? If you're old, pneumonia will probably kill you. You need some help. If you live in a poor country with poor medical services, you're at risk, my friend. There's no doubt. Okay? Well, yeah, I never said it was good, but okay. Yeah, but I've had that. I remember one time I was in Dubai and I met with an old friend. And we said, hey, let's meet up at the Palm. So I go out to the Palm. And hookah. We do hookah or shisha. I always forget it. One of them, hookah, I guess. So we go to this beautiful hookah bar in this beautiful, the Palm, right? And yellow Lamborghinis everywhere. Anyways, we sit down. We have a good conversation and stuff. And then I get back to my hotel and I was at the Jumeirah Towers. And so anyways, I'm up there and all of a sudden, I'm like, oh, I don't feel good. I'm like, oh my God, I think I'm going to throw up. And then, yup. And then, not to be too graphic, on the toilet, both ends, throwing up and diarrhea all night long to hell and back. Now, the awesome thing is, in the morning, I had to get on an airplane. So really, truly, the whole night I'm thinking, this is going to be hell. I have to get on a 20-hour flight back home. And I'm like, I can't even walk. So by the time it gets like, 6 o'clock in the morning, I'm ordering miso soup. Right. Holy, because I can't even eat food. Lots of things are like going to hell and back. Right? Oh, so there you go. Kyle spent a week and a half in the hospital right before Christmas due to pneumonia. And it probably wasn't fun. And you probably don't recommend it. But if it's a virus, isn't it likely to run out of steam when flu season is over? Well, you're Nintendo, that's called spread. Can they see you? Yes, of course. Do they trade against you? Some probably do. Most would not. Should you spread them out? Yes. So look, you got some money. Why don't you consider hiring me? You're going to have to pay me a ton of money, but I will teach you how to trade that properly. You could trade 250 lots in a $5 trillion market. You're fine. I know people, I don't trade 25 lots at a time. But I know people that trade way more than that per time. So can you do it? Yes. You might be doing it poorly. Okay? That's different. Plus, if you don't have any money, that's a problem too. So you could be a fool and be trading 25 standard lots, or 25 standard lots could be tiny. So let me ask you, for example, do you have more than $500,000 in cash in your account? You shouldn't matter. If you don't have to be embarrassed. You use a risk manager, right? Use a risk management formula. No, it's a pretty standard question. Shouldn't be embarrassed by that. Do you have more than 500,000? If you're like, I have $4 million in the account, then you're perfectly fine. Yeah, so you're being extremely foolish, in my opinion. Okay. Yeah. Yeah, it's foolish. Yeah, you're over leveraged for sure. Okay. For sure. Well, like, I have nothing to gain by giving you some silly answer. There's a 90% chance we never hear from you again. So I might as well just say what I think in plain language. I hope that makes sense. No, but it's relative to your money. You don't have any money. The problem is you don't have any money. So you can't afford 25 lots. You can do it. You will blow up your trading account and you'll go from 200,000 to zero. Now you might get lucky and get to 500,000, and which you will trade 50 or 70 lots, and then in a very short amount of time you will have no money. So the issue isn't your lot size. The issue is you're underfunded for that size trades. You can do it. Okay? But it's very, very poor trading. That's even the dumbest. You're making every dumb mistake, Nintendo. You don't know how to trade. Very tight stop. So you're almost guaranteed to lose money because your stop is so close. It's just funny. Dude, here's my honest opinion. You need to stop trading like right now, like literally stop trading. Okay? Hang out here for a month. Just a month. It's free. It doesn't cost you anything except your time. And you will get a glimpse of proper risk management, proper trade planning, proper everything, a better understanding of fundamentals and all that kind of stuff. Like, whoa, 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 whoa. Honestly, I would say there's close to 100% chance you are going to end up a cliche. Yeah, honestly, don't worry about it. Just take a month off. No, I did, right? Way less. Like, drop down to 2 lots and give me an opportunity to earn your respect. Yeah, cool. Cool. I think I've gone too long today again. Well, it's almost 11, huh? Gee whiz. I didn't plan on staying here, actually, this long. So how about this? Last 15 minutes. What would you like? What pairs would you like me to review before we move on.com? It's all the same, Nintendo. If you can't manage your risk or manage your money, then you can't trade. So, yeah, click subscribe so you're notified when I start tomorrow. What would you like me to cover? Euro Aussie? Oh, you want to? Yeah. All right, let's do that since I got a bunch of trades on there. Let's take a look at that one. Let me go to, oh, not exotics. Hang on. Kiwi Swissy. Where is it? I guess I got to go to Swissy Trades. Okay, Kiwi Swissy. So what do we know? I always like to start with that. What do we know? We're in a downtrend. Okay, cool. Nice. And it's a nice mature one, so there's a lot of fundamental reasons for it. One of the things you can look at is balance of trade. New Zealand and risk on and risk off moods in the market, that kind of stuff. Okay, cool. But we also know we're on a buying zone. So knowing that we're on a buying zone, the buyers are holding up the sellers. Okay. Now, is there potential for this to become a buyer's market? Yeah, after a reversal pattern, yes. So far, we have not achieved that reversal pattern. So I've moved my stops from here to here to here to here to here, and now they're here. Okay? And the only way I get knocked out is if we get a nice reversal pattern and she pops. Okay? This is my sell zone for the month, and we're still a million miles away from there. So you can see if we're going to go back up there, I'm actually going to get knocked out. But I could always re-enter. Okay? The other thing that we can look into this is what I'm actually planning for is a fundamental move to continue, or at least as of last week, that was still the major part of the plan, that we'd have an out of position move, which means this move is highly fundamentally based, not technically based. And that we would head down here. I honestly thought we'd be down here this week. Okay? And that's where I'd probably exit this position. Because this would then create the actual counter trend move. Okay? And so I wasn't really thinking up and down like a typical month. I was actually thinking down, 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 and then out. Okay? So that's where I am now. It hasn't done one or the other. But you have seen me manage my risk, and I hope that you have appreciated that lesson where I moved and I moved and I moved. Like you remember, like I think it was last week or and early this week, I locked in like 2,000 pips, right? Like this one is 475 pips. And this one is 425, right? So that's 900 pips locked in just on this one pair. So I'm trying to give it enough room to breathe. So let me move in a little bit. I'm trying to give it more room to breathe because the question was, I think it was Mr. Heivolt said, not sure if it's bullish or bearish. Well, it's actually neither. Okay, so I'm not sure either, but my plan last week was to kind of let it go OOP. That hasn't happened, nor has it been proved it's not going to happen. So I'm just waiting. Okay, thank you, Stephen. I appreciate that. Thank you for keeping up with that. Okay. So if you're saying bad for Kiwi, then you would stay short, right? So my choice here is I can move my stop here. Okay? But there's a high likelihood I'm going to get knocked out. I don't want to get knocked out. I want to let my winners run. I want to stay in. I want to give it some wiggle room. Because I believe, sort of like the house in the casino, as long as I can, right? As long as I can stay at the table, or in this case, if the house can keep you at the table, they're going to win. I kind of look at this like if I can stay at the table long enough, I will win. I have, right? I have the advantage, right? I'm smart, I'm beautiful, and I'm modest. So I have everything to stay in here. Could I lock in 500 pips? Yes, but then I'd be emotional. I'd be attached to the 500 pips, so who cares? So right now, my worst case scenario is only 900 pips. Cool. I will sit and I will wait, but I do not want to get knocked out. Okay? So to answer Mr. Heivolt's question, I still see this as bearish. Now, if it starts to rise above this area here, I'm going to connect those wicks and this wick. If we get above there, I'm out. I got to leave a little wiggle room for the spread. So I'm just above that zone. So if it goes up here, above 60.5, I bank 900 pips. If the dairy news and the balance of trade and all this stuff, if that's going to negatively affect Kiwi, which you would expect it might, then this is going to drop and I'm going to make way more money. I still have an extra, let's calculate this out. So let's say this is where we are now. Okay. I have an extra 300 pips, 150 pips each. It's actually 175. So I have an extra 350 pips I can make. And right now I'm risking 100 by leaving my stop 50 pips above where we are currently. It's actually not even that. Yeah, okay. So I'm risking 100 pips, 50 times 2 lots. Okay. So that's 100 pips, but I'm going for 350. Is that good risk reward? Right? My risk is 1. My reward is 3.5. Okay? And I believe through my analysis of the market, both technically and fundamentally, that I'm in a pretty good position. If the market changes conditions, I'm out. Take my money and run. I know when to walk. But right now, market conditions are still slightly on my side. It's not as good as it used to be, but maybe it'll kick back in. So I'm risking 1 to make 3.5. Okay? Winner, winner, chicken dinner. Well, it wouldn't be 3 to 1. That would be reward risk ratio. I like risk reward ratio. So I'm risking 1 to make 3.5. So I'm just flipping it around. Absolutely, Penny. Absolutely. You have to understand the flow trade. So the peso trade, as I described in the video, is a flow trade. It's a money flow trade. It's not a fundamental trade. It's not even really a technical trade. So all I know is $2.65 billion is going to move from the United States to Mexico. Therefore, this might make the USD Mexican peso fall, especially if the US dollar is already weak. Otherwise, 2.65 billion is not, over the course of a week, is nothing. But in the right circumstances, it will produce something, but it only lasts a few days. Now, if you're already in a downtrend, that just keeps the downtrend greased, you know? It's like putting some ice in front of the boulder, right? But if that downtrend changes, it's over. Because the money flow all happens around the end of the month. Okay? So it only impacts maybe 72 hours, maybe. So if it's already the downtrend, it's going to resume the downtrend. If it's sideways or up, or if the dollar just gets strong because the Fed cuts interest rates, it's dead. So you have to ask yourself, like, if the US cuts interest rates by 50 basis points, how much does that impact Mexico? Is it a 1-to-1? I'll give you an example. Let's use Turkey. Okay? Turkey would like to lower interest rates to spur its own economic activity. Okay? But at the same time, it has to pay loans back to Euro and pay loans back to the US. So if you're the the head of the Central Bank of Turkey, you can't just cut. You would like to, but there's cause and effect to all this. So now if you're head of the Central Bank of Turkey and the Fed lowers interest rates by 50 basis points, how much can you lower your interest rate? Now, thinking about it, like when, I'll make up some numbers here, okay? When the Fed had interest rates at 5%, okay? The Central Bank of Turkey had interest rates at, let's say, 15%. So if the Fed cut to 4, Turkey could cut interest rates to how much? 12%. And nothing's happened, except now Turkey benefits. And then the Fed cuts to 3. Turkey can cut interest rates to 9% and have no negative consequences. Then the Fed cuts to 2%. Turkey cuts to 6%, no negative consequences. So we can say like there's a 3-to-1 or 1-to-3. So you kind of have to figure out, like with Mexican peso, peso benefits when the United States cuts interest rates, if they have, because it could spur economic activity in the United States, which might spur economic activity with American companies that have business in Mexico. It will also allow Mexico to reduce interest rates, which would spur their local economy. But the question is, what is the relationship? If the Fed is at 1.5 and Mexico is at 5, and then the United States cuts to 1, how much can Mexico cut? And there's some sort of ratio there that you want to figure out. And so right now, when you were looking at Mexican peso versus dollar, there are two forces at play. The Fed just cut interest rates, which is good for Mexico, in multiple ways. It might spur economic activity in the United States, which spills over to business in Mexico. Okay? And Mexico can cut their interest rates, but that would weaken the Mexican peso, but spur its economic activity. So you're fighting these two forces. Okay? So let's go back to what we know. Let's go back to the monthly. Okay? What did we know about the monthly? And let's change this template to monthly. Swing month. I have a swing month, right? Swing monthly. I guess that's what I was on. Okay, so we know, let's go through the facts. The facts are, if you were going to sell it, we know this is the time and the price. Okay? You got 2 or 3 days and it moved down, great. This is a technical buy zone. Okay? The other thing I mentioned is, on the short run, lowering interest rates is supposed to spur economic growth in the United States, right? But we also talked about that it won't do a damn thing about the virus. So if you were scared about buying an iPhone yesterday, you're scared about buying an iPhone tomorrow. Doesn't do a dang thing. And then people go, oh my God, I need safety. And they go back and the dollar strengthens because they need safety and because they want to. And it's not just that the Fed cut. It's that let's do it this way. It's not that the Fed cut and the dollar gets strong. People think the Fed will cut again. Under that circumstance, this dollar gets strong. So this is your flow trade, and this will probably be your fundamental trade. Okay? And at some point, if if economic activity in the United States slows, that means less businesses are going to do, U.S. businesses will do business with Mexico, and that's going to be bad for Mexico. Okay? So anyways, interesting thoughts, right? So I've gone 3 hours today, and I went 4 hours yesterday. So I want to thank you for being a part of the Forex.Today community. I appreciate you. I appreciate your time. I hope I have a positive effect. I hope you're learning. I hope you're having fun. I hope you're filled with joy and appreciation. And because I don't think you can be happy unless you have gratitude. So I am grateful to have you in my life, and working with you every day forces me to stay sharp, to stay focused, to stay interested, to stay excited. So I'm sure you have your own reasons as well. And so once again, thank you. Make sure you visit tradersway.com. Thank them for sponsoring these webinars. And you do that by opening up a demo account at first, tradersway.com. And then when you are confident in trading real money, perhaps you'll choose Traders Way as your prime broker, tradersway.com. Thank you, everybody. I will see you tomorrow. Right? I'll see you tomorrow. Thank you, everyone. And I apologize for Max, for wasting Max's time. Cheers.